Is Mary Barra leading GM off a cliff, doubling down on EVs despite market crash and losses? The news coming out of General Motors is about to send shockwaves through the car industry. Mary Barra, the company's CEO, has made a bold, controversial move that could either propel GM to the forefront of the EV revolution or send the entire company careening off a cliff. In this video, we'll get deep into the shocking truth behind Mary Barra's decisions for GM and see how she is going in the wrong direction. So stick around, and don't forget to subscribe to the channel first. General Motors, GM, is at a crossroads, and Mary Barra, the head honcho, seems to be steering the ship into stormy waters with a risky strategy. Despite the electric vehicle, EV market crash and significant losses, Barra's doubling down on EVs appears more like a bold gamble than a thoroughly planned approach. The situation's dire, losses of $200 million a week, factory walkouts and production halts are just the tip of the iceberg in what could spell the biggest disaster in GM's history. Let's zoom in on GM's EV game. Barra publicly admitted disappointment in their EV endeavors, signaling trouble in paradise. Their Ultium battery development, pivotal for GM's future EV lineup, is crawling at a snail's pace. Barra's not sugarcoating it, she's openly acknowledging their slip-ups, highlighting the severity of the situation. But that's not the only pothole in GM's road trip. Their robotaxi venture, Crew, intended as the flagship of autonomous driving, took a disastrous turn. Picture this, a driverless vehicle colliding with a pedestrian and dragging her 20 feet. Talk about a PR nightmare. GM, a colossal automaker, finds itself in turmoil. Barra's decisions are confounding everyone, from industry giants to regular folks. The company's hitting major bumps, with Barra grappling with showcasing their EV prowess and facing a startling stumble in their autonomous vehicle dreams. Barra must be feeling the heat after this one. GM is in a tight spot with the incident under independent review, causing them to hit the brakes on their cruise venture. It's an apparent slowdown, likely to figure out how to avoid turning their robo-taxis into street hazards. And let's not overlook their financial turmoil. The auto workers' strike hit GM hard, dragging down its stock price and making it struggle to recover its pre-strike status, adding insult to injury. Here's where things get even more twisted. Despite all the chaos, Barra isn't backing down on EVs. It's like she's wagering heavily on a hand that's not looking too promising. GM's making a bold bet on EVs, but the market, dealers and customers seem to be on a completely different page. Imagine nearly 4,000 dealerships raising a ruckus because they can't sell these EVs. They're practically pleading with the government to halt the push for EVs due to the lack of demand. Yet there's Barra, firmly convinced that EVs are GM's saving grace. But the financial picture isn't any brighter. GM's been hemorrhaging money on Cruise since 2017, losing $8.2 billion. Despite this, they're not ditching the project entirely. Instead, they're trying to trim sales to mitigate losses by hundreds of millions, akin to trying to bail out a poorly sinking ship with a bucket. Then there's the escalating labor cost from the fresh contracts inked with the United Auto Workers Union. By 2024, each vehicle's price tag for GM will spike by an extra $500, courtesy of these agreements. The surge in battery costs is yet another headache. Yet, Barra remains steadfast in her aim for mid-single-digit profitability in their EV business by 2025. It's akin to constructing a castle on unstable ground. Adding fuel to the fire, GM's stock has taken a hit. Currently hovering around $28 per share, it's plummeted by approximately 15% since the beginning of 2023. This figure is even lower than its IPO price in 2010 and falls far below the Wall Street projections of $42 per share. A stock drop of this magnitude sets off alarm bells. But here's the shocking twist. While Barra continues to tout this all-electric future, GM is actually raking in more profits from their new internal combustion engine SUVs like the Traverse and Enclave. Surprisingly, these gas guzzlers are outshining their older models, yielding higher returns for GM despite the electric fervor they're preaching. Promoting electric vehicles while pocketing from gasoline-powered cars is a curious scenario. The Biden administration's got the pedal to the metal, pushing automakers to switch to electric cars faster than a turbocharged engine. GM's in this EV race, but some say they're steering towards political pressure instead of their customers' needs. Here's the twist. A whopping 4,000 dealers waved a red flag to Biden, asking to slow down the rush into electric cars. Why? Well, the charging stations and range aren't there yet, and the price tag's sending shockwaves. Let's break it down. On the one hand, they promise EV buyers a fat $7,500 tax credit. On the other hand, these electric machines' sticker price is like a mansion, $60,000 to $70,000. That's a severe hit on the wallet. No wonder dealers are exhausted trying to sell these EVs. They've invested billions in training and gear, gearing up for the EV revolution, but the demand's not revolving. But wait, there's more. GM's painting this bright picture, talking about slashing EV costs, pumping billions into batteries, and cozying up to joint ventures. They're still shooting for decent earnings, even in this EV frenzy. However, Barra's not pulling the wool over anyone's eyes. The reality on the ground seems far from the picture they're painting. It's like they're trying to drive through a storm without windshield wipers. In the midst of it all, GM's caught in this tug-of-war between government policies and consumer reality. The road ahead for GM is foggy, with electrification pushing forward while the actual consumer demand lags. It's a bumpy ride, and the destination's still unclear. It looks like she's got her work cut out trying to rescue the sinking ship, but it seems she's sailing in rough waters. Instead of taking a pragmatic approach, Barra's opted for a flashy move, splashing out billions in a stock buyback plan. This $10 billion grand plan aims to keep investors hushed up while hitting speed bumps left and right. Adding fuel to the fire, GM's cranked up dividends by a whopping 33%. It's as if they're trying to buy themselves a ticket out of this storm, even while facing sky-high interest rates and struggling car sales. Their electric vehicle dreams are stuttering, looking more like trial and error than slam-dunk successes. The timing's fishy. While they're wrestling with these challenges, GM's opening the cash floodgates. Surprise, surprise, the stock market went bonkers for it, GM's shares soaring by 12% right after this news landed. But here's the thing, it's a bit of a mixed bag. On one hand, GM's trying to project they're still a safe bet, a sturdy investment. But on the other, it's almost like they're confessing they're more about maintaining their worth rather than boosting it. Cash is flowing all right, but it's pouring out from the pockets of their traditional gas guzzlers, not the shiny new EVs Barra's been championing. Mary Barra's walking a tightrope, confidently speaking on airwaves about GM's strategy execution, expecting growth and betting on robust margins. But let's not forget, this is the same GM grappling with labor contract costs of about $575 per vehicle and a robo-taxi venture raising eyebrows due to safety concerns. What does this puzzle mean for GM's future, especially in the realm of their electric vehicles? Barra's chirping about fixing battery and vehicle production glitches by mid-2024, eyeing a significant surge in EV production and better margins. However, with all the cash being showered on shareholders, the million-dollar question looms. Are they mortgaging their future to splash out in the present? Despite all this, Barra's adamant, claiming they need more Ultium-based products that customers will cherish. Funny enough, GM's been struggling to piece together battery modules for their new EVs like the Chevy Equinox EV and Silverado EV. But Barra insists this isn't an Ultium glitch. It's an automation hiccup in manufacturing, affirming they'll fix it by mid-next year. Barra envisions EV adoption as a growing trend, not a straight line. She's gambling on a longer horizon, hoping these manufacturing bumps are just temporary roadblocks. Her belief? Once they sort these hiccups and roll out the new EVs, everything will click into place. But GM's cutting costs, delaying factories, and even splurging on stock buybacks to placate shareholders. It's a financial juggle, and Barra's at the helm, trying to balance it all. Amidst this turbulence, GM is aiming for carbon neutrality by 2040, a noble pursuit. Yet given their stormy trajectory, will they survive until 2030? Barra's unwaveringly doubling down on EVs despite the market's skepticism, dealers' uproar, and the potential cliff ahead. It's like watching someone stick to a plan that everyone sees careening toward disaster. In essence, GM's playing the balancing act of juggling investor confidence while navigating through a stormy financial sea. Whether this strategy will steer them to calmer waters or cause them to hit more rough patches, only time will tell. Could GM's future be perilous due to Barra's daring, seemingly tricky moves? What do you think about it all? Do let us know in the comments section below, and don't forget to subscribe to the channel. See you in the next video.